This is the part of trading nobody posts enough. Not the entries, not the wins, not the clean screenshots after a good trade. I mean the end-of-month audit. The moment where I stop looking at individual trades like isolated events and ask the real question: what actually happened this month? Because one good trade means nothing. One bad trade means nothing. But 30, 50, 100 trades, that tells you the truth. So in this video, I'm doing a full monthly review for the month September inside my crypto journal, looking at the monthly report, checking my tags from the setups, mistakes, and other categories, going through the symbol report, reviewing the trading days calendar, and then turning all of that into a concrete plan for next month. Not just trade better, real goals, real changes, real data. First thing, I open the monthly report. This is where I stop thinking like an emotional trader and start thinking like an analyst. For September, the numbers look like this. Net P&L of $2,270. This month, I had the highest profit factor of 3. That means for every $1 I've risked, I've made $3 profit. Trade win percent is ideal, 73%. Average expected P&L is $7. So on the surface, this was a profitable month, but I do not want to stop at profitable. That is too shallow. I want to know why it was profitable. Because if the month was green but built on bad habits, then that is not real progress. And if the month started ugly and got better because the process improved, that matters even more. What I notice right away is this: my winners were larger than my losers, which tells me my risk management was doing a lot of the heavy lifting. That is good. You can see my most profitable day has been Wednesday, middle of the week, gaining almost $1,000, and my most profitable hours are in the morning, 6 to 9 a.m. I was grinding till the sun rose. Also, for my time zone, those hours were the most liquid, having high volume executions. From the last trades of the month, you can see almost all of them were losses. So this month was not a perfect execution month. It was more of a selective profitability month. That is important because it means the strategy has edge, but the execution still needs refinement. Now I look at the equity curve and the daily P&L chart, and this is where the story becomes more honest. The month did not move straight up. There were a few strong drawdowns, a couple of red clusters, but overall, it's pretty good, rising up as it should. The small drawdown here usually tells me one of two things. Either the market regime changed or my behavior changed. In this case, it was both. Early in the month, I was taking too many trades outside my best conditions. I was seeing setups, but not all of them deserved capital. Later in the month, I got more selective, fewer trades, better quality, cleaner decisions, and that shows up immediately in the curve. This is why monthly reviews matter, because if you only look at the final P&L, you miss the process that created it. From here, I usually go into the tags page because this is where the month becomes clear. In the setups, my momentum was the strongest by far. I took it the most, and it delivered consistent profits with a high win rate of 82%. That tells me when the market is moving with strength, I should be leaning into it, not overthinking it. Breakouts and VWAP reclaims were also strong. Fewer trades but very efficient. High profit factors, clean execution. Mean reversion worked, but more selectively. The outlier here is scalping. It underperformed heavily. Low win rate, negative P&L. That's not a market issue, that's execution. Too many forced, low-quality entries. Going to my mistakes. The biggest damage came from a few repeat behaviors. Overleveraging, too much size, small mistakes become big losses. Revenge over trading, one bad trade turning into a bad sequence, losing me $1,000. FOMO, entering late, low-quality setups, following online trends from X. Moved stops, breaking the risk management mid-trade because of emotions and low discipline. These aren't strategy problems, they're discipline leaks. From the market condition tags, best performance came in trending markets and surprisingly also low volatility environments. Worst performance came in when the market was choppy. That tells me something simple. I do well in structure. I struggle with randomness. Entry and exit tags. The pattern here is very clean. Optimal entries and trailing stops resulted in strong results, while trades with early entries gave me consistent losses. so patience is not optional. It directly impacts my equity curve. The time frames I use. Most of the profits came from 5 minutes and 15 minutes. Higher time frames underperformed, so my edge right now is clearly intraday, not swing. My forecast category. This one is the clearest signal of the month. When trades were confirmed by the forecast, meaning if I was about to open a long position and the AI models predicted as well that the price will rise, that usually gave me strong performance, as you can see. When I ignored it, heavy losses followed. That's not subtle. That's a filter I need to respect. So the pattern is obvious. I make money when I'm aligned with momentum, structure, and confirmation. I lose money when I rush, oversize, and force trades. That's the real story of the month. Next thing I open is the symbol report. This part is great because it tells me not just what worked, but where it worked. For this month, my better performing symbols were Ethereum, Solana, and the AI Prophecy USDT pairs. In total, they brought me about $1,200 profit. Those names gave me the best combination of movement and liquidity. That matters because when I look at the best symbols, I am not just looking at profitability. I am looking at whether the market gave me enough room to trade properly. Ethereum was the cleanest overall. It respected structure better than most assets this month. Solana was strong on directional days, especially when it expanded out of consolidation. ACT had some good runs, but I had to be careful not to force it on weaker days. Now the lower quality symbols told a different story. If we sort by bottom 20, some of the smaller, thinner names looked tempting because they moved fast, but fast is not the same as tradable. A lot of the losses came from symbols that were too noisy, too thin, or too erratic for the kind of execution I want. Sand, Alpha, Luna, big losses. So next month I want to focus more capital and attention on the symbols that actually reward discipline, not the ones that look exciting, the ones that respect my process. Now I go to the trading days calendar. This is one of my favorite views because it shows the month in a way that feels real, not just green month or red month. It shows which days mattered. And when I look at the calendar, I can see a pattern. My best days were clustered around the middle of the week. Monday was more inconsistent. Tuesday and Wednesday were stronger. Friday was mixed and often less clean. That tells me a lot. It means I probably traded better when I had more structure in the week and better market rhythm. It also tells me that some Friday activity was probably forced. Another thing I notice is that my worst days often came after I started the day with a loss and then tried to recover too quickly. That is a behavioral pattern, not a market pattern. So now I know, I do not just need better entries. I need a better response to early red days. This is the part that matters most. A review is useless if it does not change behavior. So here is my plan for next month. First, I am cutting down low-quality scalps. If the setup is not clean, I am not taking it just because the price is moving. Second, I am keeping position size tighter after a red day. No emotional resizing, no trying to make back losses in one trade. Third, I am focusing more on my most profitable trading pairs like Ethereum, Solana, and the others, unless a smaller symbol has exceptional structure and volume. Fourth, I am tagging mistakes immediately after the trade, not later, not when I have time, right away, because the faster I label the behavior, the faster I can learn from it. And fifth, I want my month to be less dependent on a few big wins and more dependent on consistent execution. That is the real goal, not just to finish green, to finish with a process I can trust. This is what a real end-of-month review looks like to me. It is not glamorous, it is not emotional, it is just honest. TradeChainly helps me see the full picture, not just the trades I remember, but the patterns I usually miss in real time. The monthly report shows me the result. The tags show me my behavior. The symbol report shows me where I actually have an edge. The trading days calendar shows me when I am strongest and when I start slipping. And once you see all of that together, the next month stops being random. I'm not guessing anymore. I'm adjusting. And that is where trading starts to improve. Thanks for watching.